Hi there everyone, it's Ifty from Extreme Returns. Thank you for joining me. For those of you who are regular, please forward by 1 minute. For those who have joined me for the first time, Chartered Management Accountant, worked for Unilever and Mars, recruitment consultancy in headhunting, set up multiple successful businesses. So I'm a chartered accountant and an entrepreneur who's worked in the corporate world. I joined Extreme Returns, joined Etoro because it's the future. Joined as Extreme Returns. I've only been trading for 4 months on this platform. Gains yesterday were excellent, 2.51 as you can see. Stats 22%, not bad, and the portfolio is doing very well. I've got at the moment 37 copiers, 239 followers. Thank you for each and every one of you. If you want to jump across to YouTube, type in Iftiuddin My Story, see a fun cartoon about myself plus a BBC interview, and please do subscribe to my channel as well. Good. Let's start the 5 minutes. Right, so first of all, I just wanted to mention some of the things in the news. Looking at my news feed, I uploaded this really interesting article which I just wanted to go through with you. From A Wealth of Common Sense, 12 Things I Remind Myself When Markets Go Crazy by Ben Castle, one of my favorite writers. He's in America. First, I'm just going to go through some of them very quickly. First of all, there is no such thing as a normal market. Uncertainty is the only constant when investing. Get used to it. So it's a mindset. Secondly, the most effective hedge is not necessarily an investment strategy. Sometimes it's just having a long time horizon. Thirdly, your gains will be incinerated at some point. Investing in risk assets means occasionally seeing your gains evaporate before your eyes. I don't know why and I don't know when, but at some point a large portion of my portfolio will fall in value. That's how it works. I'm sure experienced investors have seen that before. Number 4, you have a lot of time left on your side. Number 5, know yourself. Most people need to understand how the markets work, but knowing themselves is really important. There's nothing wrong with using a dumb strategy. He says buy and hold is one of the dumbest investment strategies. It's also the highest probability of success for the vast majority of investors. The crowd is usually right, he says. Markets don't end. For years, pundits have been proclaiming, I've seen this movie before and it ends badly. Well, guess what, he says, markets don't end. Yes, some companies fail, but most of them keep right on chugging along. So there's some really good advice that I've seen here. Let's jump across to one of my stocks in the portfolio. It is a company called Kering. There we go, Kering SA. Now, for those of you who don't know, Kering are a really interesting company. Luxury goods. So let's go through it very briefly. They fell slightly, 57 billion market cap, enterprise value of 62 billion. So when the enterprise value is greater than the market cap, the company has net debt. And that's not surprising given what's happened. So what do they do? Well, you might not have heard of Kering, but you've heard of their brands. So they own a portfolio of fashion brands, Yves Saint Laurent, Gucci, Bottega, Alexander McQueen, so many of them. So that's obviously been hit quite hard in the pandemic, and you can see, although having said that, it went down from 15.8 to 13 billion. I'm not going to go through the financials, but just to point out 1 or 2 very quick things. Free cash flow is very good, as is operating margin and return on capital employed. So Kering has been in the news, the Retail Gazette says the Gucci owner Kering sales crash thanks to lack of tourism. So I've picked up shares because I think they're relatively cheap, and I think this is going to be a very good rebound stock. And you can see revenues dropped 17.5%. This hasn't been, I think, priced fully into the stock itself. Still very profitable, and I'm sure it will be a very good recovery stock. Some things which are in the news in the Wall Street Journal: companies aren't saving their pennies as markets turn bubbly, they say. When money is readily available and almost free, why bother saving for a rainy day? For corporations, the question is worth asking at a time when dollars might as well be falling from the sky. The average rate on so-called high-yield bonds fell recently. So what they're saying is that they think they should companies should be hoarding cash more. Here, US stocks waver, bond yields rise to end the week. It's been a very topsy-turvy week. Some days were poor, other days were really good. Some really interesting news in London. Uber drivers entitled to workers' rights, including minimum wage. UK Supreme Court rules. I think this is going to have a big impact on the whole gig economy. And here, some COVID vaccines are effective after one dose and can be stored in normal freezers. Data shows that is going to boost share prices quite rapidly. That's my 5 minutes up. Thank you very much for listening. Very quickly, I am also going to give a quick plug to my wife, who is Asian Tigers at DIBA. She's got the only account, as far as I can tell, which looks after specifically China, Japan, Taiwan, and the Far East. Her stats are excellent. Only been on the platform for a short while. Got 16 copiers. Thank you to each and every one of them. Very good, high-profile companies: Baidu, Meitun, C, JD, etc. Please do subscribe. Please do copy. We're at the beginning of a fantastic journey together. Thank you very much for listening in. Take care and bye.